Good morning. My name is Scott Redler, T3 Live, Chief Strategic Officer. It is Friday. It's been a long week. This is the relaxed call, as you can see. This is what time we do it on Fridays versus the normal early time, Monday through Thursday. So here we are, a big earnings week behind us. I think the thesis has been pretty much revenue misses, but earnings look okay based on the fact that there are massive buybacks out there and they're doing massive cost cuts. Not quite the healthiest environment for a Main Street economy, but overall it seems like the markets are trying to absorb it, trying to price it in, trying to focus more, I guess, on QE and accommodation and this and that. But overall, recently during this past week or week and a half, it's been a very micro versus macro environment where very stock-specific trades, both long and short, versus trying to catch market moves. The market move that took place was the one from late June to early July, and now as you absorb, it's time for earnings season and report cards, and lots of stocks are trading differently. So you look here at the chart of the SPX, you will see that here we are. This was that May 22nd outside day that wound up leading to about a 6% decline. Here's a 100-day moving average, traded below, regrouped it, then your little digestion, and then from there we've had a nice macro move, and lately it's been very micro. So now, two things going on right now. I guess I'll point out just to have in there. If you remember when this outside day took place, you had this somewhat of an ascending channel. So one sign was when it broke above, came back below, and the other one was when it traded below this little low area. That was your micro sell signal if you really want to identify it very closely. Okay, so if you look here on the SPX, okay, I don't really see a similar pattern, but there's a lot of bears out there. There are some day counters and cycle guys out there saying that today, Monday, marks the end of this bull run. So I'm just trying to figure out what could show us that. Try not to be ultra bearish. Let's do it with the spiders. But I just want to make everyone happy and give enough if-then statements if it were to take place. So here's that ascending channel. So really, you didn't have to be bearish until we closed back below this 166.50. So if you look at the chart of the spiders, you can see something sort of similar, okay, where you have this ascending channel, and really no reason to get any type of negative unless we close, just say, on an hourly basis below 168.20, which we're above now, or I would say even give it to here. So if we were to close below this area, maybe this last ascending channel after a major run could get resolved to the downside, and then you have the 8-day, which matches up to the gap, and then for an intermediate guy, unless we close below this, okay, again, don't have excessive, short on the brain. I'm just going over, this would be, the market confirming a bearish thesis. First, an hourly close below 168.20, then even below this for an hourly close, but then a daily close there could get us to the 8-day. But then on a macro stance, look, we're above the 8-day, above the 21-day, above the 50-day. It's been quite a move. So you just got to realize, what time frame you trade. So going back to more tactical. Last night we had Microsoft and Google. Microsoft was just a disaster. Stock's been pretty positive all year. A lot of emphasis and positive thoughts around Windows 8. Their report card showed they lost almost, I don't even know the exact amount, but in essence of $1 billion, I think, in the Surface tablet. So here you are after a big run that we've seen. Price for a good report. It came in a bad report. Here would be some support right around 32.57, so we'll see what happens there. I would be in no rush to buy Microsoft, and I don't think you need to be in a rush to short it. Still above the 100 and the 200 day. Let's see what type of gap down we have in the action. If you remember in Intel, not as bad of a report as Microsoft, and it also, wasn't at the higher end of the range. You look at the whole now. This is what I'm going to be looking at over the next few weeks after earnings season, the dust settles. Look at this hole. The question is, does this hole in the chart, okay, which is your gap down with nothing filled, does this control the direction? Because if this doesn't get filled over the course of a week, chances are, Intel can continue lower, and that would be bad for the semis. Same thing goes with just like in eBay. eBay has, big hole in the chart. It did come off the lows a little bit. It's in this big range, right? This is your macro range, okay? And the question is, what happens next? Does it go sideways, and do we get a trade above the earnings high for a nice little, cash flow gap fill? Does it stay here, show no demand, and then continue weaker. So that's the type of trades you look for afterwards if you're looking for an active approach. As far as Google last night, it's well off the lows. This also kind of priced for perfection up here. I went along some Google calls. They're worthless. Sucks when that happens, but it's better than being trapped in the stock. I did trade it after hours, make a little bit of money, but not what I lost in the options. But anyway, yesterday it was as low as 858. Okay, so you look here, that's 878. You look here, this low is what's that low? 864. So I would say, looking at it today, this was the overnight low. Okay, and it's rallied a lot off of it. Do I think it could fill its gap? I don't think so. But we'll see what happens. Anything could happen with this stock. It's, right now an institutional favorite, as everyone out there is still defending it after this report, and you still have majority of $1,000 price targets. But I don't think it happens anytime soon now. So the question is, in this channel, will there be a buying opportunity? Then once it has a hole set up, or a big gap, how long does it take to digest before trying to fill it, which would then just get it in this range? And then I'm sure maybe sometime in the fall, if it can hold above and go sideways and build this channel outward, okay, just won't do it this time, goes this way to the side, then maybe it'll get another chance down the road to break above this and reach some of those expectations. But at this point, it'll be in this lower end of the range, and it'll be much more of a, base building, repair itself. Almost kind of like what happened with LinkedIn. LinkedIn, well, if you remember, had a really nice move, was priced for perfection up here, had a soft report, but if you came in and you bought the dip, okay, after the report, because it wasn't a horrible report, just wasn't enough to get it going after a huge move, you could have bought it at the 100-day, or you could have bought it when it broke above a nice pattern. So we will look for a pattern to set up. Now here you are back at highs, and even at another pattern yesterday, okay, going into earnings. So it goes to show you that sometimes these gaps, okay, you can maneuver them for a while, and then they turn into pivot points that can provide you cash flow. So that's what we'll be looking at moving forward. As far as some other thoughts, we were talking last night on the chat room. Everyone's like, oh, Apple's down $2. I bet your money tries to hide in Apple. After the Google and Microsoft miss, it's now up a little bit. You still have this lower level. It still has earnings on Tuesday. People were, I think, a little happy with the Verizon news for it and whatnot. You have the same type of pattern coming here. Look at this ascending channel, and it stayed in it, working its way higher, driving you to drink anytime you bought it higher, before negating it lower. Here's the same type of pattern. Very small days, no real follow through. You could buy it when it's red, sell when it's positive, make some cash flow, but no real momentum. But it'll come up and test this again. Chances are, Tuesday will be the day when they report earnings to figure out whether or not it could break above this trend line that's been intact since almost 2013 and make a move, or will it make another leg lower? At this point, let's just revisit this then. Today, maybe there's opportunity there. As far as yesterday, I think a lot of guys had a lot of success in the banks. The banks were set up. They looked good. They opened up positive. They closed near their highs. So today with the futures low, or down a little bit, let's see if they come after them. Yesterday, JP Morgan, was a great spot, a nice targeted spot for cash flow, broke out. I would say now it's got to hold above these highs here of 50, I'd say 55.80-ish, build to go again. Goldman gave you a nice trade yesterday, not as strong, not at highs yet. Morgan Stanley helped fuel that. You look here, if it were to base a little bit more, I think you get another nice trade there. Bank of America, very extended, but it's been a really nice hold for a lot of people. Some guys bought a core trade again here, added for cash flow there, and then you sell into some strength. I'm still holding some. It's been a nice core trade this whole year. As far as Morgan, that helped lead the charge yesterday. Big gap up. Now let's see it, do some sideways work above that gap. CMG was like a positive report after a big move. So, I wouldn't chase this on the buy side, but I wouldn't be, all in trying to short it either. I would say if it could hold and stay above 390, you could see some follow through to the upside. But if it were to get back below 390, be a little careful. It's come a long way. As far as GE, no real interest. It's up by 20 cents. It hasn't been trading that well. 24 is your area there. Schlumberger is actually up, a decent amount. This stock has had a stealth recovery. Maybe somebody, returns to these refiners as oil started to move up. Remember, these things came back in play, and now it's all the way back up here. So this has, been something on the outskirts that looks decent. Let's take a look at the OIHs. OAHs, look at that. After breaking this little intermediate trend here, it's slowly going higher, right back at highs. Maybe there's another trade here today if tech remains weak, and that's been the story of the market, rotation. This group, which was the part of the weakest group, earlier this year, is now back at highs, whereas the home builders, which were the strongest group, in the start of the year, is now, needing time to absorb higher rates. But at some point, perhaps after enough digestion, if it stays above this, just say 30 area, this trend could break to the upside. But it just shows you how, leadership changes and the price action changes. So all in all, I think there's still a lot to like. It's just a bit more specific, and earnings season is always like that. You have your naysayers, you have your glass half full guys, your glass half empty. All in all, it's been a lot of nice action. Even at Tesla, you look at the tactical action there for active guys, really nice, really nice technical action here. Everyone doesn't understand how to do it, then join T3 Live because we'll show you how. Here is your exhaustion gap, get out of town. Here's when this ascending channel broke to the downside, and then you had two small different type of red dog reversals. One here, okay, into major support at 107.30, giving you a nice buy signal. Then opened up yesterday, traded quickly through 121.62, up $1 or so. You could have shorted it there, made some money, and then some guys even bought it. So now I would say give it a few days to do some inside work before a better trade. If you want to knick-knack it, the low here is 116.18. Here's your high. See how it develops in that inside range. Someone asked me to put up gold. I guess I will. Overall, this pattern here is sloppy, and it's really, to me, it's not that, it just doesn't make that much sense all the time. But anyway, here is your, blood in the street low. Here is your higher low. Here is, a gap above, and it's, I guess you could say it's holding it a little bit. So still in the game for at some point perhaps to fill this gap. But overall, you either have to give it a lot of room or trade it very short term. For me, it doesn't look that compelling, and every time it looks its best, it fails. So I hate when things do that. So I'm going to stick away for a little while. TBTs, they actually gave you a really nice day-and-a-half trade. Talked about buying this one in the hole. Remember that right here. Into the 21-day, right? The trend is your friend until it's not. Well, it was here again. Nice follow through yesterday. I sold some on the close. I still have a little bit, and now let's see if it could hold above here to continue. So we'll see what happens there. So lots of little things to do. You just have to, it's summertime, measure your commitment. It's Friday. I wouldn't do too much today. I think a lot of guys had some nice success this week. If that's you, congratulations. Next week we have a whole slew of earnings again, Broadcom and Apple on Tuesday. I'll go through the whole calendar on Monday. And just, keep today light. We'll be able to judge these holes in the charts coming up in the next week or so to see if they give them a pass and get filled, or if these big gaps in the charts wind up leading to directions to the downside. But again, in the S&P and some of these sectors, there's no true signs yet, but try to map out a little bit of a plan just in case something sneaky happens. So with that said, if you're a macro investor putting monthly funds in for the past 5, 10, 20, 30 years, congratulations, you stayed the course. You get to actually be happy at all-time highs because you had a plan and you dealt with it that way. If you're an intermediate guy trading trends, lots of nice action from the May 22nd top to that late June low. Lots of tactical moves, lots of leadership to go after, lots of nice breakouts. But now I think it's a little less. Little less is a little better right now, especially if you want to enjoy your summer, because it does go by fast. Scott Redler, T3 Live, the relaxed morning call. I might not see it to recap. If I don't, have a great weekend.
I'm Mark Sperling, Director of Trading with T3 Trading Group and contributor to T3 Live. Do you trade on your own, but you wish you enjoyed the benefits of a large trading floor? With the T3 Live virtual trading floor, we deliver that experience to you on your computer. On the VTF, you can follow the long and short positions of experienced professional traders like myself, Scott Redler, and others, and listen to our live radio stations as we navigate the markets. In addition, you get the added value of a large community of sophisticated and like-minded traders. Your membership to the virtual trading floor also includes access to our two very popular newsletter products, Off the Charts and the Price Point Sheet, at no additional cost. In my opinion, joining the room will be the best trading decision you will ever make. I would like to invite you to begin your membership with a 7-day free trial. To get started, visit t3live.com and click on the Virtual Trading Floor tab. Have a great day, and I look forward to seeing you in the VTF.